In this video, I want to talk about 9 tips for you to save on your 2023 tax bill, or at least in future taxes. My name is Scott Caulfield. I'm a CPA and CFA charter holder and the founder of Sophos Wealth Management. So my first tip is one of the easiest ones, and that's just to maximize your retirement savings. So you start with your 401k plans. Obviously, you want to get your match first, but every dollar you contribute to a traditional 401k is going to reduce your taxable income by that equivalent dollar. So one of the easiest, quickest ways to reduce your tax bill. Additionally, if you put money into a Roth 401k, that's not going to give you tax savings today, but that's going to greatly benefit you over time because you're going to be able to pull that money out without paying taxes in the future, and all the growth will occur tax-free. Now, if your plan allows it and you have the financial wherewithal to do it, I love the mega backdoor Roth. So only some 401k plans allow this, but this will allow you to contribute all the way up to the maximum of the 401k contributions for 2023. So that gets a lot of money in if your accountant allows it, your 401k plan. Now, you can also contribute to traditional IRAs or Roth IRAs if your income's not too high. And if your income is too high, you can consider doing just a normal backdoor Roth conversion. Just beware if you have other traditional IRAs to not get caught up in the pro rata rule. That really kind of takes the effectiveness of the backdoor Roth out of play. Next tip would be tax loss harvesting. So if you've got a taxable brokerage account and you're sitting on some things that have a loss, you can sell some of those things at a loss. That's going to help generate a capital loss, which you can use to offset capital gains and up to $3,000 of ordinary income. Now, I say be wary with this one. Don't let the tax tail wag the investing dog, but where it makes sense, let's say you had some long-term bond exposure, like a TLT type fund. You could sell that, which has been kind of a loser the last few years, and put it into a very similar fund, get you the same exposure, and give you that capital loss today that you can take advantage of. So, easy way to just offset some gains, or at least offset some ordinary income. Another one is to just make estimated tax payments or make sure that you're not going to owe an underpayment penalty. Now, this mostly applies to those who have either a lot of capital gains, a lot of dividends and interest, who are self-employed, people who have other income that doesn't have federal tax withheld. You don't want to get dinged with that underpayment penalty, and certainly not interest come tax time. So if this applies to you, you should kind of just assess your situation, get an estimate of where your tax bill might be at, and make sure that you're within at least 90% of where you ultimately will owe on taxes during the year. Another one is to make sure if you are 73 or older in 2023, make sure that you take your required minimum distribution. The penalty on failing to take an RMD is 25% of that tax balance. So it's one of the highest penalties the IRS will levy. That actually used to be 50%, so quite a bit worse. But this is just an easy one. Make sure that you've covered that obligation and you'll be set. You could also consider doing, if you owe an RMD and you're 70.5 or older, you can consider qualified charitable distributions. If you're charitably minded and you send that money directly to a qualifying charity, you will not owe taxes on that withdrawal. So that's a great strategy for those who are charitably minded. If your employer offers you a flexible savings account, FSA, make sure to use that money by year end. This is use it or lose it money. So any unused balance will go back to your employer. Don't want that. So, look for opportunities to spend that money. If gifting is part of your estate plan, make sure you take advantage of that in 2023. So you can gift up to $17,000 per person to anyone you'd like. So let's say you've got 2 kids and you're married. Both you and your spouse can give each kid $17,000. It's a great way to knock down taxable estates without having to pay any taxes on those. So if that's part of your strategy, that's going to help you save on taxes over time. So another strategy you can look at is itemized deduction bunching. So if you're somebody who takes the itemized deduction some year, but you're close to the standard deduction, what you might consider doing is bunching your itemized deductions. And what this would look like is, let's say you make charitable donations every year. Instead of making a consistent amount every year, let's say you made $10,000 in donations every year. Don't make $10,000 each year, do 0 one year, and then you'll have a lower itemized deduction that year. And so you'll just take the standard deduction. Then the following year, give a $20,000 donation. So you have a higher donation in just that year. Your itemized deduction will go up. and you'll still end up giving the same amount to charity over time. So it's a great little tax benefit you can do. And again, this is, mostly if you're close between itemized versus standard deduction, but it's a great way to look at getting a little bit more savings eked out. If you're saving for college, you've got any kids, grandkids, look at 529 plans. A lot of states will give you a tax deduction for doing that, whether that's a deduction from income or a credit. It's going to depend on your state, but that's a pretty easy win in terms of at least state taxes. Finally, if you're self-employed, much like thinking about the itemized deduction bunching, you can think about trying to be strategic about your business expenses. Now, of course, it has to be legitimate business expenses. They got to be ordinary, necessary, meet all that standard testing and that kind of stuff. That being said, you can kind of be strategic about this. Let's say you think your 2023 business income is going to be particularly high. You might pull forward some future expenses. There's a piece of machinery you were thinking about buying for your business next year. Maybe you pull that into 2023. Conversely, maybe 2023 was going to be a low income year in the business and you think 2024 will be higher. Maybe you defer some of that business spending into 24 so that you can kind of better knock down the higher income year. So anyways, these are, just some strategies you can think about to lower your taxes in 2023. Always happy to talk about your situation. I encourage you to visit my website and please like this video and subscribe. Thanks a lot.